Do tell us what those numbers look like, because Sobha is declining more than 5.5% in trade today.
Rightly said, Sobha actually came up with a weak set of numbers for third quarter. This was specifically dragged by Bengaluru and Gurugram portfolio. So let's understand how the numbers were. Sobha's sales number in terms of value declined almost by 29%, and at the same time, when we talk about volume terms, we saw a decline of around 40% on a YoY basis in third quarter of FY25. Now, this weak quarterly performance was mainly accounted because of the 42% YoY decline in the sales volume from Bengaluru, which comprises almost around 71% of the sales mix. Other than that, when we talk about some other aspects, Bengaluru's specific project, which contributes around more than 50%, actually reported a decline in sales, and that is the reason why we saw the drag. Apart from that, reports also suggest that around 33% YoY decline was there in Gurgaon as well as Kerala, which is again a significant portion of Sobha's portfolio. Other than that, when we talk about brokerages also, we saw Nuvama, while maintaining buy rating, actually revised the target price to 2,177 rupees versus what it was at 2,198 rupees. So again, a pessimistic note coming up from brokerages as well. And on back of this, we are seeing some weakness in the stock price. So definitely watching out on Sobha on the back of the weak set of numbers for third quarter.
Alright, that's Sobha. Then on the back of the weak set of quarterly updates that came in for the company from the real estate pack, the entire real estate pack in fact is reeling under selling pressure today. But moving on to an IT name that is in focus today, and that is Infosys. Infosys, on the back of brokerage note that has come out for quarter 3 FY25, Jefferies expect Infosys to narrow its growth guidance to between 4 to 4.5% on a year-on-year basis in constant currency terms. Nomura expects a constant currency growth of 0.2% on a sequential basis in a seasonally weak quarter, that is quarter 3. They also expect the EBIT margin to improve 30 basis points on a quarter-on-quarter basis. The company did not get affected by any salary hike. BofA also says that Infosys could indicate comfort at the upper band, at the upper end of their current revenue guidance of 3.75 to 4.5%. They expect an uptick in small deals should be incremental factor as far as quarter 3 is concerned. On the back of these brokerages note by BofA, Nomura and Jefferies, Infosys is in focus today. It is currently trading absolutely flat, nonetheless trading in the red, but absolutely flat for the day for now. But we'll move on then. Now we'll move on to Nilesh, who's now joining us. Hi Nilesh, thank you. Good afternoon to you, and thank you so much for joining us. Nilesh, tell us, you have picked out Coforge for us as your first pick. Why this counter? I mean, we can already see a 61% move, like some great gains coming in over the last 6 months. Is there more steam left on this counter? Do you see it headed towards its 52-week high?
Very good afternoon to you. If you look at the Nifty IT pack as a whole today, we are witnessing some downtick, and in Coforge, we expect some profit taking to continue. In last couple of sessions, we have seen somewhat of consolidation, but from here, we expect a follow move on the lower side. In fact, we have seen unwinding of the position on the long side, and probably we may see a build up on the short side going forward. So from here, we expect Coforge to test 93.50, 9300 on the lower side. So it's a short candidate. One can keep a stop loss at days high of 9600. Till the time it doesn't cross that 9600 mark, we can expect a follow up on the lower side towards 93, or maybe 90 to 50 can be tested.
All right, but with that, as we speak of Coforge, let's go and hear out from Gurmeet Chadha, the managing partner and fund manager of Complete Circle Consultants, on his take on the IT pack. Let's go across and take a look at what he had to say.
IT should do well. So there are three things. One is the currency thing, which has probably near-term impact. Second, if you see, the wage hikes have either been delayed or wage hikes have been very low. The big issue was IT companies was attrition. A lot of companies were facing 30-40% attrition with frequent wage hikes. So both of these issues have been solved with the issues happening. Third, the US, if Trump walks the talk and really cuts taxes, corporate taxes, you'll probably have more discretionary budgets spent on tech. The only thing is the IT portfolio should not just be IT services. You've got to have a combination of companies which is including services, including IP-led names, including companies with the software component being high. So you got to be a little careful there. And even in this space, the good ones are not cheap. So something like a Persistent is 50 times plus earnings. KPIT has seen some bit of a slowdown because it's largely dependent on auto. It's a unidimensional tech company, if I were to put that. So you got to be careful in balancing it out. So we like HCL and Infi in large cap names. We like Persistent. We like Newgen. And we are also looking at, I also consider a lot of these new age companies like Zomato in the digital portfolio.
All right, that's the word coming in by Gurmeet on the IT pack. But moving on from IT pack to hospitality sector, Nilesh, you picked out Indian hotels for us. Nilesh, it's a no-brainer. Indian hotels has been a giver. But in the last 1 month, we are seeing a bit of a consolidation. Actually, the stock has been rather flattish in the last 1 month. If you look at their moves, from here on, how do you see Indian hotels going? What are the levels that you're penciling in? It's already sitting at 835. Just a few points away from its 52-week high of 894.
So there's no doubt about that. The Indian hotel has been one of the outperformer, and we have seen recently the stock has hit a new record high as well. But soon after that, we are witnessing some profit taking, and we expect this profit taking to continue. So it's again a short candidate. We expect Indian hotel to test this 50-day moving average that is placed at 800. So from current level, we may see further downtick towards 800 levels. 855 should be the stop loss for the short position. So we are expecting some profit taking to continue. And from a position point of view, it's no doubt in an uptrend, in a very strong uptrend, but there has to be some retracement. So to play that retracement, Indian hotel can be shorted.
All right, Indian hotels, a shorting opportunity coming in there. But moving on to Dr. Reddy's lab, Nomura has come out and they're maintaining an upgrade. Gaurav, tell us what are the target price for this one, and what is Nomura saying?
So let's talk about Dr. Reddy's. Let me just correct you a little. It is actually Nuvama who came up with the note, who upgraded the rating to buy and also gave a target price to 1553 rupees versus what it was at 1215 rupees. So let's understand what is happening in Dr. Reddy's. So Revlimid was one of the patents which is expiring in 2026. Now this poses a significant threat to Dr. Reddy's according to some of the analysts. But at the same time, when we talk about this drug, this also contributes around 40% of its EBITDA in FY24. But what Nuvama says is that management has actually outlined some of the strategies to come out from the pain that we may see because of the Revlimids going out of the portfolio. What they're saying is that the key assets are there, such as some of the assets which will be launched in Canada, and there are some biosimilar projects which will be launched in US, which can actually bring the EBITDA again to break-even point. And at the same time, when we talk about valuations, they believe that the currently company is at a break-even point and also offers a better risk reward on the back of the valuations. And when we talk about the stock performance also, it is up in trade on the back of this note. So definitely watching out on Dr. Reddy's on the back of the positive note came up from Nuvama today.
All right, keeping with the pharma pack then, Rahul Chadha, who's the founder and CIO of Shikara Investment Management, believes that there is an opportunity in the traditional pharma space, the CDMO and the hospital names. Let's go across and listen in to his views on the healthcare space.
Opportunity comes again both in traditional pharma, CDMO and hospitals. See, these are hospitals are particularly names we've invested in last 5-6 years. They've done well. Again, go through a breather for a couple of quarters, but the demand story is secular. You look at the numbers of diabetic patient, the cancer patient in India, those are humongous numbers. And again, people have willingness, propensity to pay, insurance coverage is better. So that's where the hospitals is. For pharma, the story is that, look, in the past, we saw a significant erosion in generic drug pricing in the US. That's not happening. So the capacities are limited over there. And a lot of these pharma companies are smart. So there is talks of some of them kind of going into the GLP-1 opportunity in next 2-3 years in markets like Canada, etc. So those can be additional triggers for these pharma companies. So good growth stories, secular growth stories. Again, one has to be mindful about valuations. One's got to be mindful of the fact that the companies one is invested in do not have significant one-off or are not riding on significant one-off opportunities. So that comes with it.
All right, with that, it's time for us to slip into a short break. You don't go anywhere on the other sides. We're getting you some more buzzers. Stay tuned. Welcome back. You're tuned into Market Fatafat, where we're taking you through all the stocks that are in focus today on the back of news flow and on the back of technicals. And on the back of that, let's focus on Tata Steel, which is in focus today on the back of the Q3 updates that has trickled in for the company. Well, they feel that, they've said that its crude steel production in the country grew by 6% to 5.68 million tons in the third quarter of the current fiscal. The company's crude steel output was 5.35 MT in the corresponding quarter in the previous fiscal. The deliveries in India has reached a 5.29 MT, for the third quarter, up 8.4% on a year-on-year basis due to its steady sales in the domestic market and strategic presence in exports. Tata Steel's Netherlands reported a liquid steel production of 1.76 million tons for the third quarter, with deliveries at 1.53 million tons. Now, Tata Steel UK's output stood at zero for the quarter on account of closure of its blast furnace in the second quarter of FY25, and the deliveries dropped 12.5% on a year-on-year basis to 0.56 million tons. Now, however, the company has reconfigured its supply chain to sustain customer servicing through downstream processing of purchased, substrates. That's the exchange filing said for Tata Steel. On the back of that, we are seeing right now very flat moves coming in for Tata Steel. It is trading in the red with very, very flat with cuts, minor cuts of 0.2%, but it's in focus on the back of those updates coming in. But moving on, Nilesh, you've picked out Siemens for us. Tell us, what are you seeing on the charts for this counter?
So Siemens, one of the underperforming the recent times. The stock broke down, given a breakdown below its 200 exponential moving average, and also it was trading in a very tight range since past almost 8 to 10 months now. That range has been broken down, so structure is looking slightly on a weaker side, and we can expect a follow-up move on the lower side towards 6,200 to 6,000. So 6,000 can be seen from a short to medium term point of view. 6,500 should be the stop loss for the short position, and if it reclaims 6,500, then we might see a short-term rally. But looks like it is heading towards 6,100 to 6,000 kind of levels on the lower side.
Moving on then, Gaurav, I'll come to you for Reliance, which has been really holding up the Nifty. But before that, let me quickly mark the market. Speaking of Nifty, we're seeing a recovery of 190 points, almost 8 tenths of it's up 8 tenths of a percent. It's a recovery of 190 points coming in. In fact, if you look at Sensex, that's up. That has recovered more than 500 points from the day's lows. So there's a recovery, a sharp recovery coming in for Sensex. Nifty also posing a smart recovery, at least for now. If you look at the Sensex has recovered 645 points actually. It's trading up 8 tenths of a percent from the day's lows. So smart recovery coming in on both the benchmark indices for now. But we'll move on to a heavyweight that has been lending its support to the Nifty since morning, and that's Reliance on the back of brokerage note. Tell us, Gaurav, what does the brokerage note say? Reliance 2% up in trade today.
Well, yes, this giant is up 2% in trade, and the reason being that there are two brokerage notes which are actually being bullish on the company. So first, let's talk about Jefferies, who maintain buy rating and a target price of 1,690 rupees. What they are saying is that valuation for the company is at the cheapest level since COVID. At the same time, Reliance has already been underperformer if we compare it with the Nifty. Other than that, what they're saying is that the concerns around the medium-term growth perspective in terms of Reliance and growth earning for FY25 are there. But with this, they're projecting around 14% EBITDA growth in FY26, and all the segments will be contributing to the growth. Other than that, Bernstein is also being bullish. They have maintained their outperform rating and a target price of 1,520 rupees. They believe that 2025 will see a recovery for Reliance. Jio's ARPU can increase at a rate of around 12%, and at the same time, retail will revert back the double-digit EBITDA growth for Reliance. And that is the reason when we talk about stock performance also, it is holding up with the gains of more than 2%. So definitely watching out on this counter on the back of the brokerage note, a positive brokerage note coming up on the company.
All right, a positive brokerage note coming in on Reliance. Coming to you also, Nilesh, you have also picked out Reliance for us. While there is a positive brokerage note coming in for Reliance today on the charts, what are the kind of moves that you see?
So technically as well, if you see Reliance, which was underperforming and not participated in the pullback, so now it looks like it is leading from the front. It has formed a good base formation in the zone of 1220 to 1250. So that's a good support zone for this particular counter. So Reliance looks positive for further momentum towards 1300 to 1320. So this particular counter can be played from a trading point of view as well as can be added in the portfolio stocks as well. So both from short term to medium term point of view, I think Reliance looks attractive at current level. One can keep a stop loss below 1245 and it can be added in the portfolio.
All right, moving on then, that's Reliance on the charts as well as on the back of brokerage note, positive bullish brokerage note coming in on Reliance. But moving on to the cement pack, that is, in focus today. Second day in a row. Yesterday we saw Nomura's note coming, channel check coming out on the cement pack. Today we have CLSA that has come out with a note on the cement pack. They feel that the earnings visibility is improving, the pockets of opportunity is arising. They turn constructive on the sector as they see incrementally better earnings visibility in the calendar year 2025. They expect demand upcycle to resume as several levers start contributing with profitability at a multi-quarter low. They now expect companies to be relatively more disciplined in competition. The price increases are likely to remain muted and lower than past average. They expect the industry profit pool to rise 25% on a year-on-year basis in FY26, more than the larger players on the market share gains and cost saving. Inorganic expansions is also something that's likely to remain in focus. Their preferred picks is Ambuja and Ultratech among the large caps and Dalmia Bharat in the mid caps, and they have upgraded Dalmia Bharat as well to overweight from a hold, and they've set the target price to 2,110, and ACC also they have given an upgrade and they've set the target price at 2,580 rupees. In the back of that, we see a cement pack in focus today. Dalmia Bharat in fact is trading with gains of 1% right now. Moving on then, Nilesh, we'll come to you. You've picked out SRF for us. Tell us, what do you see on the charts for this counter?
So majority of the chemical stocks have started participating in the rally in last couple of trading sessions. So SRF, I think it is on the verge of a breakout. Technically, the stock is forming a good base formation, as well as on daily time frame chart. If you see, it looks like inverted HNS pattern breakout coming in the SRF stock. So looks attractive. Good build up on the long side can be seen as well on derivative front. So we can expect a follow-up move towards 2450. So that's the immediate target in this particular stock. And stop loss can be placed somewhere on 2340.
Moving on then, Nifty is posing a really sharp recovery right now, 221 points up. In fact, it has now switched to, it's trading in the green now and it's up. It's crossed those 23,700 levels. We were facing a bit of a resistance, right just before the 23,700 levels, but we have managed to cross that now. We are in the green territory. We are trading flat for now, but a sharp recovery of 220 points coming in on the Nifty. We are sitting pretty above the 23,700 levels for now as far as Nifty is concerned. So smart recovery coming in as far as the markets are concerned, and smart recovery coming in on the Sensex as well. But let's go across and to you, Gaurav. You've picked out the auto pack for us. Jefferies has come out with a note for the auto pack. Do tell us what does the note say?
Auto pack, specifically when we talk about companies like M&M, Eicher Motors and TVS are in focus, because Jefferies have now turned positive on these companies. What they are saying is that they remain positive on the IT Indian autos overall, and at the same time their preference will be on the two-wheeler segment and the tractors over passenger vehicles and trucks. They say they believe that valuations are not cheap, but at the same time they also believe that premium multiples should remain for the companies who have better growth outlook, and with this their preference list includes Mahindra & Mahindra, Eicher Motors and TVS. On all these companies they have maintained their buy rating, and at the same time there is another news flow coming up on Mahindra & Mahindra. Earlier we saw Maruti was up in trade today because of the electric vehicle that they are launching. At the same time we have already seen Mahindra came up with the 2 electric vehicles, and now they have also announced pricing for 2 models. What they are saying is that these models will be priced at a cheaper level if we compare it with its peers. The first vehicle, which is Mahindra XCV 9e, will be priced at around 30.9 lakh, while the other vehicle B6 will be priced at around 25.6 lakh. So another affordable pack is what we can say from Mahindra in terms of electric vehicle. And on back of this, we will be definitely watching out on this overall auto segment, specifically on the companies mentioned by Jefferies on the back of a positive note coming up from them.
Moving on then from the auto pack to the paint sector. Tell us, Nilesh, what do you see for Berger Paints? The paint segment is one area where the competition is really heating up. But on the charts also, you can see that the impact coming in on Berger Paints. It has been in a consolidation mode, corrective phase in the last 6 odd months. Tell us from now on, do you see this counter breaking down, or do you see a recovery coming in on Berger?
So there's no doubt about that. We have seen a lot of underperformance in the paint space. Both Berger Paint, Asian Paint were hammered. Now it looks like they have gone into extremely oversold territory. Now from here we can expect a dead cat bounce or a strong recovery. So Berger Paints, specifically this particular counter is looking attractive from a risk and reward point of view. One can keep a stop loss below 445, and this particular Berger Paints can be added for upside target of 475 to 480. So purely from a trading perspective, I think Berger Paints looks attractive for a pullback to continue towards 480 to 490.
All right, with that, we have come to an end of this show. Those were the stocks that were in focus today. Thank you so much, Gaurav, Nilesh, and Nagaraj, who joined us in the first segment. Thank you so much for taking the time out and joining us on the show. With that, it's a wrap on this edition of Market Fatafat. I'll take your leave. Thank you so much for tuning in. Don't go anywhere because closing trades will take the market action forward.
If you like this video, then like, share and subscribe to ET Now.